real estate has created more riches than any other industry ever. Many think real estate investing is elite. Not anymore. Greetings, aspiring entrepreneurs. Money Craft Masters here to reveal the secrets of the trade in real estate. Estate Goldmine. Tips for first-time investors. You're at the perfect place whether you want to flip houses, make money from rentals, or find a home that grows. We'll discuss market fluctuations, investment goals, financing the dream, choosing the right property, mastering the buying process, and managing your growing empire. We'll even discuss portfolio expansion for those ready to advance. Let's begin if you're ready to realize your real estate ambitions. First, comprehend the real estate market. Real estate investing goes beyond buying a home and waiting for its value to rise. Understanding trends, economics, and local characteristics can transform a good investment into a gold mine. Invest. Market research is your best buddy. When and where to buy are important. Do you know a new public transit line might boost local property values? Or that a new school district improves a neighborhood? You can make informed decisions with these insights. But where to begin? Look at the national economy, interest rates, and housing market first. Zoom in on your interests. Average home price? Properties on the market how long? How's renter demand? Ask these questions to assess the market's temperature. Remember, all investors started at the beginning and had to learn to read these signs just like you. This video will give you a solid foundation to do that. Stay tuned as we explore real estate investing. Last, after understanding market research, set investment goals. Navigation without a goal is like without a map. Do you want steady rental income or property value appreciation? Perhaps you want to flip quickly. Let's define your strategy, which will influence your decisions. First, short-term versus long-term investments. Short-term strategies often involve flipping properties, buying, renovating, and selling them for a profit. It's a hands-on approach that can yield returns quickly. On the other hand, long-term investments, like rental properties, require patience but can provide consistent, passive income and tax benefits. But how can you decide which path is suitable for you? Consider your financial situation, your availability, your abilities, and your tolerance for risk. If you're not ready to face midnight calls about a broken water heater, then managing a rental property might not be for you. Unless, of course, you're willing to employ a property manager. And let's not forget about your financial health. It's vital to analyze how much you can commit without overextending yourself. A great investment is one that you can afford to stay onto, even if the market takes a momentary dip. So identify your goals, connect them with your specific circumstances, and prepare for the following step. Financing your investment. Stick around as we break down the figures and negotiate the financial maze of real estate investing. Moving further, let's address money, especially financing your investment. The reality is, most people don't have the cash to buy a property outright, which means you'll likely be looking at loans and mortgages. Understanding your financing alternatives is vital since it influences not just your capacity to purchase, but also your potential return on investment. Firstly, there's the usual mortgage option. You'll need to evaluate the down payment, interest rates, and the loan period. These factors will influence your monthly payments and the overall cost of the loan. It's crucial to look around for the best rates and conditions that suit your investing strategy. More creative funding alternatives include real estate partnerships, private loans, and seller financing. Each has pros and cons. Partnerships can help you buy a more expensive property, but they require sharing decision-making and earnings. Don't forget your credit score and financial background. Lenders will review this information to evaluate loan terms or eligibility. Be sure your finances are in order before applying. Next, we'll discuss property selection. Not simply what you love, but what's likely to appreciate, attract decent tenants, and meet your investment goals. So tune in as we discuss how to choose a real estate property that's almost a sure thing. Okay, you're financially ready to explore property. Finding the right property requires patience, diligence, and a keen eye for potential, like finding a needle in a haystack. This is where market research and investing ambitions meet real-world opportunities. Consider location first. The real estate golden rule is for a reason. A good home in a terrible location is counterproductive. Look for new infrastructure, schools, or businesses emerging. Positive indicators increase property value over time. Consider the property type that meets your needs. Do you want a single-family home, multi-unit dwelling, or commercial property? Each has its own challenges and rewards. Although single-family homes are easier to manage, multi-unit properties can earn more rent. Check the property's condition. If you don't mind fixing up a house, you could find a deal and increase its value. If you're not handy or can't afford repairs, a turnkey property may be better. Expert advice: get a professional inspection. This can prevent costly surprises. Our next section will cover buying's complexities. From offering to closing, there are crucial steps that can make or break your investment. Stay with me and we'll help you close the deal confidently. Having zeroed in on the perfect property, it's time to grasp the nuts and bolts of the buying process. This can be complex, but with the right knowledge, you can navigate it like a seasoned pro. First up is making an offer. This isn't just about what you're willing to pay. It's also about understanding what's a competitive bid in your chosen market. Your offer should represent the current market value, the property's condition, and your budget. And remember, it's not just about the highest offer. Conditions and contingencies play a huge influence as well. Once your offer is approved, you'll enter into escrow. This is a phase where all the essential inspections, assessments, and paperwork need to be completed. It's a key time to dot your I's and cross your T's. You'll want to work closely with your real estate agent, lender, and even a real estate attorney to ensure everything is in order. Then begins the due diligence period. This is when you should undertake a complete property inspection, research any homeowner association HOA bylaws, and check for any legal issues that could influence your ownership. Finally, there's the closing. This is the finish line when you sign all the paperwork, complete your mortgage, and assume ownership of the property. It's a process that may be both exhilarating and exhausting, but once the keys are in your palm, it's all worth it. In the following part, we'll shift gears to managing your investment. Whether you're becoming a landlord or keeping onto a property for its value to appreciate, there are tactics you need to know to safeguard and develop your investment. So, don't go anywhere. The journey to real estate prosperity continues. After buying the home, you must manage your investment. Profit maximization and property smoothness are the goals of this stage. Landlording requires more than just collecting rent. You must screen renters, manage maintenance and repairs, and follow landlord-tenant laws. Maintaining a professional relationship and protecting your investment requires clear policies and consistency. For individuals who dislike property management, hiring a property manager may be a good investment. They can manage tenant complaints and maintenance calls, which is handy if you're not local or prefer a hands-off approach. However, this service costs a portion of the monthly rent, so you'll need to budget for it. Don't neglect finances. You must keep detailed tax records, analyze your income and expenses, and make informed judgments about reinvesting in your property and increasing your portfolio. Next, we'll discuss real estate portfolio growth ideas. There are several ways to buy new homes, explore different forms of real estate, or leverage your investments. So stay tuned as we outline your real estate empire blueprint. After handling your first investment, you may be thinking, what's next? Growing your real estate portfolio is exciting yet strategic. First, evaluate your investment. Are your financial expectations met? For future investments, what have you learned? Use this data to improve investing criteria. Leverage your property next. You might refinance and use the equity to fund more investments if it has appreciated. This portfolio scaling method is frequent yet risky. Make sure you understand new loan terms and how they affect your finances. Diversity is another crucial strategy. As with equities, don't put all your eggs in one basket. Risk can be balanced by property type and location. Commercial or industrial properties may keep constant if the residential market slows or vice. Networking with other investors might also boost growth. Register for real estate investment seminars and network with specialists on social media. Partnerships, joint ventures, and insider trades might result from these links. Never stop learning. Successful investors monitor market changes, new laws, and fresh opportunities. Consider a mentor or advisor who can adapt advice to your aims. Finally, increasing your real estate portfolio requires clever planning, informed decision-making, and measured risk. The potential rewards are high. You acquire experience and wealth with each new property. Thanks for traveling with me through a real estate goldmine. Tips for first-time investors. Real estate investing is continually changing, so there's always more to learn. So subscribe, leave comments and questions, and let's keep exploring this intriguing area. Keep investing and stay golden until next time.